Hey everybody, good morning. It's Monday, September 25th. It's Booksy. We're going to be talking about AMC stock today. So last week was, I wouldn't say it was a bust. It was just pretty much just a solid consolidation period. You can tell that we are forming what appears to be a bit of a pennant at this point. This would more than likely signify that we're going to have bearish continuation, but the way that the pattern typically plays out on AMC is that you'll get to the end of the pattern, you'll get one more push up. Oftentimes it'll be just above the previous high here, which would signify a distribution is happening. This is not an all the time kind of thing, so it's not like this has to happen technically. This already made a hook here on this lower creek. My suggestion is that it probably does something very similar to that again after jumping this outward creek right here. So we'll kind of walk through it here in a minute, but just so you know, like that patterning would have a breakout target that goes pretty far. So there's two main targets down here. One is around 660, and that's this downward trend. That could be like a shallow spring type area. If it hits it just right, it could end up being a good thing for us if it comes down first, because it might mean that we hit 660s and then recover, or even a low dip and then recover at 660, if that makes sense, like come hard down to say like 598 and then recover up to 660 or something. That could be a really good situation for us in the case of a spring action. However, if we do see that push to the upside, I'm inclined to think it's going to distribute and come down to the actual pennant target. The actual pennant target, the latest one that I got, which was over here measuring down, was about 554, and that's pretty low, but that puts us in a pretty good spot because you can see it's right beneath this particular support here, which is about the 50% marker. And I think that this could be a place where we might actually see that significant turnaround, because the only thing left on this giant rotation, if you zoom out and look at it, and it also just happens to be potentially like a 5-wave kind of thing right here. The only thing left here is that last drop. So you've got from the top 1, 2, 3, all the way down to here. So 1, 2, 3, 4, 5. Now there's more complexity to it. You've got a 1, 2, 3, 4, 5 with an ABC correction. But this is starting to shape out just like this guy. And I was mentioning on the Discord all last week, if you guys are on our Discord group, we were talking about where do I think that happens? Where do I think there's a make or break point? It's really at this outer trend wall. We haven't touched it for a long time. And we're right at the edge of it right now today. So all that being said, you know, I said rotation, and I think that that's what this is. You've got a massive drop here. You've got a sideways kind of LSPY type action, which we, you know, obviously we thought that was going to be our holding our support as a sort of a, you know, LPS before it actually broke down. But then ever since then, we've just had these little bear flags. This one's been particularly long, right? It's much like what we see up here. And if you notice, the rotation has a massive drop sideways across the channel, and then there's a double tap here. It goes down, double tap on the bottom, massive across. So the reverse would be that final drop. Now, I'm not going to put too much emphasis on that it has to go, you know, here, here, here. But I do think that a drop down to that 554 area, maybe even a little bit lower, does suit our purposes. Because coming down to this little pocket right here would be a great place for us to reverse. On the biggest time frames, we're still pretty darn oversold. On weeklies and up, we've got a ton of room to the upside. This thing's just kind of boiling up, and I know you guys are like, well, I can't see any of that, Booksy. I did a lot of work, and I'm not going to go through this right this second, but it's a lot of work that I did on what are, to me, very simple S-curve RSI analysis. Point being is that the anticipation of this next motion would probably be to come down and hit one of these trends right here. And this is based on analysis of two S-curve areas right here and here that resulted in a creek cross, and then comparing that to a very large version of that. Again, I'm not going to get into it right now. It's a bit too much for a Monday morning, video. I don't really want to go into it heavy detail. But the point is that we got to this place where we were pretty oversold, and then you can see that on the weekly, it actually closed not oversold. So you can see it's kind of just flat and just waiting. And I really think that we need to get this last drop here to really get to that place where it's officially oversold, and then we should have a pretty strong reaction. Good news, of course, being that, yeah, on the grand scheme of things, there does seem to be, at least right now, and maybe it'll change if we get that drop. I don't know how low it's going to go. But there does seem to be a pretty strong RSI divergence on the whole. We've never been as oversold as we were back in 2017 on this stock. So right now we're still climbing. We'll see if that changes. But this target lines up with a lot of different things. So I think a quick dip down to that 530, 540 area, maybe 550, you can kind of see the numbers on the screen. And then a recovery back above 6 is really what we want. And now I did talk about last week 1080. I still think 1080 is very, very important. But you have to understand, like right now we're in new territory on AMC. And so it's very unlikely when you start dropping like this. And this is kind of the point I was trying to make, again, in the Discord group a week or so ago. We had a few people that were like, well, it should just have this V recovery. And I'm like, yeah, I know I was in favor of a V recovery, but I was in favor of a V recovery down here, because a V recovery down here would be retracing all the way back up through everything we've already gone through. And whenever you've already satisfied a range, there's no longer a strong desire to sit there and chop sideways. Well, lo and behold, where are we sitting and chopping sideways? We're doing it in like a new region. So to me, it's not so much a matter of like, is it possible? Of course it's possible. But more like what's more likely. And what's more likely down here is that we're going to see some kind of a bottoming structure down here. I don't think it's just going to rocket back to the upside. I said, at best last week, what we could have hoped for would have been a push back above 1080. That would be an indication that that was it. That was the reaccumulation down here, and then we're going to go. But I think that on the grand scheme of things, there's just a ton of time now. And I don't like it, but that's just the way that it is. Like, we continually have pushed off away from this creek that we kind of rejected against. We've got a lot of space here before we come back up and test those macros up near 45. By the time we get there, it may be 45. It may be more like the 25 to 30 area. We may not ever come back above here until we finally break out, and it could be much later. So that's not to say that I think that it's doom and gloom. I don't think that AMC is going to go down forever. I've already said that like a number of times. And I don't think that this whole schematic is destined to never recover. But I do think that you need to form a bottom, right? And I think that once that bottom is clearly established, and like I said, could be right now, but we got to wait and see. Once that bottom is clearly established, then I think you're going to take off. So what I imagine happening here is that recovery. I think we're going to form some kind of a divergence on like a larger time frame, maybe with RSI. So I think we're probably going to spend some time beneath 1080. That would make the most sense at this point. And I don't know exactly what it's going to look like. Don't really care to speculate on that either. But I think that something like what we saw here, where you have some kind of a rounded accumulation. These two yellow lines that are coming down, I'm calling them the cat ear lines. They're very important. They signify two major structures coming down, and we don't ever leave them alone. And when we walk down, like, they're always respected, right? And when we walk down, that's actually right where these two hooks occurred, right, on these two markers. And they're significant for that reason. But then when the bottom structures form, I think they're going to be also very, very significant. So I think you're going to have, like I said, probably some downside, and then we're going to come back up. We'll probably accumulate right below the previous bottom here at 6.80 or whatever it is, $7. We'll sit there and then we'll come back up. That's what, remember I said we got to come back above 6 and find support. Then that would be like the first breakout. And then we should see a push back up. And then this time it would accumulate here above or between the two, right? And that would be somewhere around where this line intersects here. And then we finally go. So the good news is that it's setting up in a way that I could see the bottom structure forming, but we're just not quite there yet. And I'm not convinced, not yet, not convinced that this is going to just turn back around. Now, I know a lot of people are questioning about volume. They're saying, well, there's a super high increase in volume here, and doesn't that mean that we're, bottoming? Yeah, I mean, it does in some regards, but no, it doesn't in other regards. Remember, AMC was in a liquidity crisis, and I think it was already having those problems back here, where just so many players had gotten out of the stock. You were only getting these like up thrusts that were selling off, and we had massively low volume for a really long time. And yeah, I do think this is a lot of selling and a lot of buying coming into these lows. But that doesn't mean that you can't have, again, more accumulation time. And it doesn't mean that this has to then be the final structure, okay? It could be that this is the first major buy-in, and we're going to see a couple more as it goes. So where does the buck stop? Well, I'm going to be kind of blunt about this part because there's no sugarcoating it. Should we see that breakdown around like 480, 475, I don't see how we don't come down really low into the threes, because there's nothing here, and the only thing I can find are these equal part divisions, and the next one down is that 350 area. And then back to the upside, I don't really see how we could come back above 1080, find support, and then not have a pretty decent run. I think at that point you're pretty much free to go, and I do think we're going to try to get up to that $20 area. Long term, though, I don't see this as a very, very long-term setup. I think maybe, I kind of have this mapped out timing-wise. I think we've got a potential run going into October, about a month from now. And at that point, maybe we could come back up. But like I said a minute ago, and I know my chart's a mess right now, but what else is new, right? I just don't see this being like an immediate recovery necessarily. I think we might come back up here. We may see another redistribution possibly around that $25 area. This happens to be like a 50% on this major trend. And I think we come back down, and I think we need to find another support again, probably in the region between, $6 and 1080 again, or $6, yeah, and 1080. I don't see how that's out of the question, this idea of a push and then coming back down and then pushing again. And oftentimes what we see on these is that's exactly what happens, is that there's this kind of rising accumulation that occurs. And then eventually when you kind of work your way back up, this is where you get that breakout. So first it's like a push, then you come back down to find support, and then you push again. This time you break over that midline. This time you find support around the 20s, and then you push this to be like a reaccumulation, and then you push again. And at that point, we could be heading back up towards the top region, which at this stage is starting to look more and more like it's pretty far out. This is the next year, and this would be up and around 120, and that makes some sense because that's near where the last major distribution we had happened. Now, could we go beyond that? Sure. But in terms of, we could. But in terms of like the bottoming structure, the main thing that you'd want to watch for is eventually, like once this breaks out on this S curve, once this breaks out here, you typically have a nice push up. So once it breaks out above, like let's say 45, is not that different than what we had been talking about on this S curve structure. That's the lower ear. You'd end up with that push. Potentially back to the upside, and that push could end up getting you pretty high, and I think it's very possible that we break above and come up decently high, maybe all the way up to 187 or 201, close to that previous $21 range that we had always been talking about, because that's a natural place where you might see that that happen again. That's long term, okay? I really don't see that being like an instant kind of thing. And you got to remember, even back here, a lot of people, and I do the same things, we compare it to previous run-ups. Look, it's not out of the question that we have a short squeeze that just takes us straight up, but even back here, you have a 10-month period of RSI divergence, of buy-in, and before these moves happen. And here we've basically exhausted, we lost, what was built up here. Now, I made a case that perhaps it's not quite that simple. I still agree that it's not quite that simple because technically the average is not up here. The average between AMC and APE was much lower. It was actually similar to where we were back in 2020. Very similar range right here. Nevertheless, we did sell off, right? And now we're needing to see if we can reaccumulate, find a new accumulation range, and then break back out again. Once that happens, do I think that we go back up? Yeah, but I think there's going to be some sell-offs, and there's going to be some time built into that, just like there was here. This wasn't instantaneous, right? We had a several-month period in the middle of reaccumulation. So those are the kind of things that I'm watching out for, I'm thinking about. I don't want to make a jump and say that we're just going to go right up. I think the time for that was down here when we were still in the previous area. I think it's less and less and less likely without having a solid bottom. You need to have smart money buying in, and they don't buy in unless there's like a clear change, right, of character, and there's a clear change of in the structure, clear change of strength. So yeah, so right now it does look like it came back down. I'm kind of going backwards now to the small scale to wrap this up. It did come back down, broke beneath this trend, which would be your pennant. So that puts into question whether or not we actually do come back up and retest that 850 area again. I don't want to say it's out of the question. It's not out of the question. It's definitely a possibility. You can see that there's a repetition here of form. We might get that last push up, but if it comes too low here, it's very possible, just like I have drawn, that this could just turn into a big hook motion where you don't actually get that last push up. Instead, it pushes up like a hook and then drops. So either way, whether we hit these lows first and then come back up and get stuck under, let's say 760, or if we see that push back above, we get a nice little squeeze point here up to 850. I'd be looking again purely at the short-term technicals for this, seeing if RSI gets oversold, seeing if your indicators kind of flip as you start breaking. If you do break back up, you start breaking back up to the upside. And I would be looking for that area. And I think we just need to come slightly above the previous high. It might be somewhere just shy of that 875 or something like that. And then we would have probably a pretty strong reversal at that point. Okay. Now, that's the bearish outlook. The only bullish outlook I can see at this moment is one in which we come down and we form a spring and then we push back up. And of course, in that case, when we come back up, we would be doing an SOS, and that would be above that 875 area. That would be up here, okay? And that would be a break of the channel. My anticipation is not that that's going to happen right now. Like I said, I still think there's a strong chance we need one more good low. But hey, if it comes down first and we hit this 660 area, we'll see what happens. If it hooks, okay, that's pretty easy. And if it comes back above, again, that could be a potential spring action. So we could watch and see if it comes back up to the high. But as soon as it passes above the previous high here, around like that 864 mark, just be mindful, right, if that's what happens, if we get up there, because that's the area you're going to have that make or break. All right? Okay. All that being said, I hope you guys have a great week, and I will talk to you later.